There's so much to talk about, and I think what's the takeaway is that the world is growing. There definitely are some potholes. When you extrapolate for 2014, worldwide GDP is still consensus. Nothing has changed. It just seems like maybe short term, there's some potholes that we're hitting right now, especially, as you said, the emerging markets. But nothing right now to be concerned about, and especially when it comes to capital flight. That's something we emphasized a lot in 2013, and thus far haven't seen it in 2014.
Just on, I guess, China and what your sort of view on that there is after we've seen that GDP number come through and PBOC step in, injecting liquidity into the banking system after those short-term borrowing rates rose there. So seeming to ease concerns about a credit crunch. But what do you make of the risks out of China in 2014?
Well, yeah, there's plenty to talk about. We have China growth, China liquidity. The fact is, China is growing. It definitely has hit a speed bump, as it were, over the last few months. PBOC coming in, injecting liquidity, a good thing. But something that China has to continue to do is telegraph exactly what they're doing to the rest of the world. It seems like when we have crisis, banks around the world are very good at coordinating efforts, communicating efforts, but when things are good, it seems like banks do just the opposite. And so for us, for the rest of the world, especially Australia, that depends so heavily on China and China's economy, we need to hear exactly what they're doing and why they're doing it.
The Wall Street Journal report too, saying that there'll be another $10 billion cut from the bond buying program by the Fed at the next meeting. I mean, seemed to certainly cause some jitters. Will gold falling as a result, greenback strengthening? What's your view on the reaction that had, the expectations surrounding tapering right now?
Yeah, you know, Bridie, I think the markets have fully priced in and come to terms with the fact that the Fed is going to taper $10 billion and will probably be finished by November. In fact, if they don't do that, if there comes a month between now and November where they can't or won't do that, I think that's going to be a negative for the market, because the market's comfortable with the fact that the Fed is tapering for all the right reasons. Sure, there's things that could be much better in the United States, especially wages. Wages are very, very low right now, and that's going to create a lot of slack in the labor market because of it. However, I do think the equity market, the interest rate markets have reacted quite well and have priced in the fact that $10 billion a month is what's going to happen between now and November.
Larry, it's Mark Todd here from Figure. I've just come back from being in the States, and one of the things I picked up is the mobility of the workforce is obviously getting better and better all the time. But the government was involved in some argument around the unemployment benefits, and they were trying to get these people who are long-term unemployed. Have they been able to resolve that debate at the moment, or are we continuing to see that fragility in the employment market because they can't get any benefits?
Yeah, we're still fighting that out, and that's an enormous fight, as you would know, and the money involved is staggering. I mean, the problem right now is that when you're unemployed on a long-term basis, it's just starting to create a stigma upon that person. So it seems like a self-fulfilling prophecy. States are having individual arguments about this. This is not anywhere close to being resolved, except for the fact that we really don't have the money to continue paying long-term benefits. So it is going on, but what's peculiar to me is that the markets have seemed to shrug their shoulders at it, not over-analyzing it or overthinking it, thinking that it's somehow just going to get figured out.
Yeah, I hear what you're saying, because it was clear that the Senate had come up with a plan, but it can't get through to the President. And I got the impression that they were starting to get into this fractious political arguments again, and I wondered how that was going to affect the confidence of the consumer. That was just one of the concerns I was noted when I was over there.
Yeah, no, it's a great point, and it's just it's becoming more fragmented every day that goes by. And I think the average American understands and appreciates that we do need to have a safety net for the unfortunate in our workforce. However, we just can't continue to go on paying benefits the way we are blindly. A lot of people thinking maybe we should have an office of accountability to make sure people indeed do need the long-term benefits that they're getting.
Just turning to earnings, if we could as well, quickly, Larry, because it had seemed to start off the season in pretty strong fashion, but then some disappointments over the past few sessions. What do you make of the most recent, the likes of Johnson & Johnson, Verizon's results just in this session?
Yeah, you know, if you take it all in aggregate, it's been kind of okay-ish, as it were. I mean, I think banks were the big surprise on the upside, and that's kind of offset the retailers, who I think are just going to face constant headwinds going into 2014, not because of the consumer, but just because bricks and mortar buildings are just going out of fashion. We are seeing Intel, Verizon continue to go down. It's been really mixed, and our market's going from very macro-focused to micro-focused. So yeah, the earnings season is still sort of early. It's painful, but it's very stretched out. We have IBM coming out this afternoon. That's going to be a big one. But all in all, I think in aggregate, it's been okay. Not great, but okay.